Softbank is launching a second massive tech fund. This one will be called Vision Fund 2 and will be done without money from the Saudi kingdom. Instead, the likes of Apple, Foxconn, Microsoft and Kazakhstan will contribute more than $100 billion to invest in startups working specifically on artificial intelligence. The first Vision Fund has been a resounding success. Profit is actually up more than 300% in the last fiscal year. Its greatest hit so far might actually be Uber. The Vision Fund made a big bet at a discount while Uber was going through a series of PR problems. It paid off when Uber finally went public earlier this year. It also actually has a slice of Slack as well. The fund actually bought into Slack at about a $5 billion valuation since its IPO. Slack is worth more than 3 times that. The Vision Fund was also in early on WeWork. Reports say WeWork could be aiming to go public this fall. It would be the year's second biggest IPO, only behind Uber. Jerry Colonna is a venture capitalist who built some of the original tech investment funds, working with Softbank back in the 90s. His book is called Reboot: Leadership and the Art of Growing Up. Jerry, I have to say, first of all, I really thoroughly enjoyed your book. We'll get to that at a different date, though.
But thank you.
But when it comes to specifically this Vision Fund 2, just walk us through the investment strategy, because there is a target on AI. Why?
Well, I think it's pretty obvious that AI and more specifically machine learning represent the future of technology. They represent the future of innovation, if you will. And Masa Son has always been on the leading edge and way out in front, sometimes a little scary, sometimes a little risky, but always been out in front in recognizing what the next trends are coming. And I think he did it in Vision 1, and I think he's going to do it again in Vision 2.
So how much control will the founders actually have over the investment strategy now that they're obviously not going to be working with Saudi Arabia anymore?
I don't know the terms of the LP agreements. I don't know the terms that they have here, but it would surprise me if there's any dramatic change in Vision 2 than there was in Vision 1.
So how does this Vision 2, actually both funds, really change the relationship between startups, corporations, and investors? Walk us through that.
Yeah, I think that that's the thing to really focus on here. What we're talking about is a magnitude of investment that, 20 years ago, 30 years ago, when I started in this business, we weren't talking about these numbers. $108 billion fund was just not something that was seen before. And with that kind of investing power, what you're seeing is significant investments, $10 billion investments at a time, that really alter the trajectory and the time frame it takes to launch a business. This really challenges and changes the way the normal trajectory for a company to unfold. And then there's a corollary challenge, of course, which is it challenges leaders, it challenges the business leaders to grow in different ways at a much more rapid pace.
So what effect does that have on Silicon Valley culturally?
I think that's really a fascinating question right now. One of the biggest concerns I would have, and to be clear, one of the things I do right now is I coach many of these CEOs. And one of the challenges that they all have is that we're raising the ante. We're raising the definition of what does it mean to be successful. And so if I take it sounds wonderful, if I take a $100 million investment in a third round of investment in my company, I have to have a significant exit in order to generate a return on investment for my investors to satisfy the LPs who are in this fund, let alone the folks who are driving Softbank Vision 2. That changes the dynamic, and one of the concerns I would have is, are we then forcing, inadvertently, unconsciously forcing kind of the worst behaviors that we have seen of late in Silicon Valley, where there's just a heavy, heavy emphasis on return on investment and less of an emphasis on building a long-term sustainable and ultimately ethical, responsible business.